Good evening, everyone. Microphone's on. Well, we're here for the meeting tonight of the Facilities and Finance Committee of the School District of Waukesha. Has the meeting been properly posted?
Yes, it has.
Okay. Opportunity for citizens to speak. Do we have any citizens that want to speak tonight? No citizens? No speaking citizens?
Well, we have one citizen, but she's here for an agenda item, so.
Oh, okay. She's going to speak later, maybe? Yes. Okay. Well, then let's get on to the approval of monthly options, our only action item for the night. Did you get any phone calls on?
I received no emails or phone calls for voucher questions this morning.
Okay, people, there's these nice pivot tables that she sends out. We should have at least 20 questions per committee member. I need this.
That's why we don't have questions.
Right, I'm providing so much information. Right.
Do I have a motion for approval of the monthly vouchers?
So moved.
Do I have a second?
Second.
Motion by Mr. McCaffrey, second by Ms. Madden. Further discussion? All in favor say aye.
Aye.
Aye. Opposed? Motion passes 5-0. Information items. I think we have an audit presentation tonight. Is that correct?
Yeah, Amber's here with the results of the 16-17 audit and she'll walk you through the financial statements. You want to come up, Amber, you can.
Make sure microphone's
Dave.
on.
Okay, yeah, he's still coming. but-
Oh, they're surprised we started on time.
Yeah.
Yeah.
See, we scared her off. No,
Is that?
scared her off. Okay?
Put me on the spot because he was planning on doing the presentation, so.
Do a better job anyway.
Amber's actually the person who's here auditing our books, so she'd probably give you a more insightful report.
I
So
hope we'll see.
the most knowledgeable person is here to jump right in.
Yes.
Good, great. Have at it.
Okay. I don't know if that hears, but on page 1 of the bound financial report, this is our auditor's opinion, our independent auditor's report, which gives our opinion on the financial statements. So you can see on the bottom of page 1, we're giving an unmodified opinion on your financial report, which includes the governmental activities, and each major fund. It also talks about our responsibility, that we're expressing an opinion and we do not give absolute assurance.
Okay, before we go further, let's formally introduce, I don't think we've got the full names in the record.
Yeah, Dave Macau is the partner or lead, and then Amber is and has been doing our field work for my 2 audits, and I think even prior to that, so.
Yep.
Amber, your last name?
Juriski.
Risky. Okay, I'll remember that. Okay, let's move on then. Thank you.
I just started, Dave.
I just did the opinion if you wanted to.
Yeah, she just finished.
If you wanted to jump in. Yep.
Shortest audit report ever. It took her 3 minutes.
So as Amber said, we issued an unmodified opinion, so the best opinion you can receive on your financial statements. Your financial statements really begin after management's discussion that goes through a number of things that, from a perspective of the district, really start on page 16 of the report. So pages 16 and 17 are what are known as your government-wide financial statements. What that means is it reflects all financial activities of the district. So you can see from a perspective your assets, your deferred outflows, liabilities, and net positions. So when you look at one of the things that is effective for the district's financial statements is the impact of the pension system for the state retirement system. So last year, you can see there was a pension liability in the middle of the page that really reflected the market value adjustments of the system. So you will see going forward changes from year to year as the Wisconsin retirement system does report its data. But from a perspective, the system itself continues to be well-funded. When we look at, what we like to look at is your net position here. When we look at your net position, you are reporting a positive unrestricted balance, and your net position was approximately equal to the prior year. So overall, what you see is your assets came down primarily due to paying off some of the liabilities and how you handled some of the accrued payroll going forward. But overall, your statement of net position does show a strong position. If we turn to page 17, you can see the impact by the various different categories. One of the things that for a school district, obviously you depreciate your assets over time. So you can see your net position did decrease slightly, but overall, as I indicated, we believe the district's from a net position is currently functioning fine. Then if we turn, starting on page 18, here is your governmental funds. And here's where, when we look at your governmental funds, here's where you really look at what you adopt as your annual budget. So once we turn to page 18, we're more focused on, how your annual budgets, what you're adopting from a perspective of going forward. You can see overall, your general fund balance is about 37.7 million. And you can see you did assign some of that general fund balance for future retirement obligations. So overall, when you look at your fund balances in your general fund, and we'll see when we turn the page, you had a very strong budget year. The other major fund is your debt retirement referendum. So one of the things that when we look at the general fund, it does include your special education or Fund 27 in addition to Fund 10.
Excuse me just a second. Darren, assigning to future retirement obligations, is that something new for us?
It was a designation, and what that is the OPEB settlement. So it's just designated within fund balance. It's not a trust or anything of that nature. It's just simply an accounting entry on the balance sheet. And it was all having to do with the OPEB funds.
Okay, but does it offset, does it show up as an accounting offset relative to our projected OPEB? Does it net out?
It will reflect, actually, we're due for an actuarial study coming up, and it will reflect as a deduct of our overall responsibility or liability.
So in the past, we would have been zero in that area because we never had anything in that offset,
In the recent past, yes.
recent past. Okay.
And that's something that can be, that can be changed and reviewed at any time, so.
Yep. Okay. If we turn to page 20, page 20 goes through the operations. It does show the general fund. It does show the debt service and the other funds. Overall, as we saw, the general fund, it did have an increase of approximately 2.6 million. And you can see overall your general fund balance is about 37.7. You can see going forward, we believe that the district certainly is in a very strong position as you look at kind of your fund balance, your position, and because of your strong position and the positives that we saw in your government activities, you have a sufficient cash at the end of the year kind of to balance your cash flow needs and going forward. So from our perspective, a very strong financial position as you enter the current budget year that you're in. And it really reflects kind of, how you're managing your funds and everything from a perspective of, where you are. So when you look at your fund balance in your general fund, the positive balance was certainly when you look at how you adopted your original budget to the final budget and final activities, you certainly had a strong budget year going forward. So a lot of that had to do with the settlement and the other sources that you see above is the primary reason for that. So, yep. Any questions on that? Okay, the rest of the report goes through footnotes and supplemental information. We're pleased to indicate that, from our perspective, there's no, everything that, from a perspective, everything within the audit reflects, how the audit went. And, the last thing I want to point out is starting on page 63 of the document. And why this is important is, as a district, you receive a lot of federal and state funding. So part of our audit, we spend a lot of time working with the team here on the financial balances, working and looking at, the information contained within the audit report. But as important is how you manage your federal and state funds. So if you look on page 63, it shows that through multiple different programs, the district received about $8.2 million of federal awards. You can see the various different programs all the way from the child nutrition cluster to Title I to special education. And then if we turn to page 64, page 64 goes through a perspective of all the state financial assistance. So from a state perspective, you received about $61.5 million, the largest of which is your equalized aids. And why this is important, or perhaps stepping back, just letting you know from a compliance perspective, we did not have any non-compliance that we are required to report to the board or required to report to the federal and state agencies, which is a very strong statement on how you're managing the federal and state funds that you've been entrusted. And from our perspective, as we completed the audit of federal and state assistance, we believe the district, in all material respects, complied with the requirements that we're required to report. So.
Mr. Como?
Now, when you're doing the audit, you take samples.
Correct.
Could you
yes.
talk to a little bit about how you choose what to sample, and I'm assuming you didn't look at every
Correct.
one of these transactions. Could you explain that to
Correct.
us?
The way the federal and state government requires, and if we turn to page 63 or 66, excuse me, they require us to select what we call major programs. So every year we rotate different programs that we select just to get a sample over time. And if you look at 66, you'll see that we audited the child nutrition cluster, which is all the food service programs this year. And we also audited, from a state perspective, transportation, general equalized aids, and per pupil. So over time, we rotate the programs based on the guidance that the federal and state agencies. And so within so we focus our audit work on what we call our major programs. And within these, we select sample transactions throughout the year. So we look at, the claims that are filed throughout the year. We select a sample of payroll transactions. We select a sample of disbursement transactions. We look to make sure that the district has the appropriate control structure within those transactions. We also look with respect to any type of compliance requirements. So we look at allowable cost. We look at, for like child nutrition, we look at eligibility, making sure that the enrollments of the pupils that are receiving free and reduced lunch are in alignment with the requirements within the federal guidelines and the poverty guidelines that the federal government. So each of these programs have multiple different dynamics that we're looking at, including the period of availability. Are the reporting requirements being reported in a timely and accurate manner by the staff here at the district? So we don't obviously select everything because that would be very comprehensive, but by sampling throughout the year, if there are a problem, we would identify a problem that existed in control. So the federal government and the state government is very focused on controls. If the controls are here, the likelihood of non-compliance is reduced. So we focus on controls first and then compliance with the requirements.
Sure, fair enough. Looks like maybe about every 4 years, roughly, you'll get through all the programs. Or is it not really a true rotation?
There's a rotation, but certainly smaller programs we do not test just because of the dollar value. The federal and state governments want us to look at the higher dollar values first and more frequently. And like anything under You know, anything under, from a state perspective, 62,000, they view as low risk, and they really say you don't have to test it. In the federal government, it's generally things, you know, under 100 grand or so, you know, periodically you have to look at, but not to the same degree as the major
Okay.
programs.
Okay.
And the concept is, if you're managing your bigger programs well, you're managing
Sure.
your smaller programs well.
Sure, the processes follow through.
Correct.
Gotcha. Thank you, Dave.
So when you look at the one that relative to the federal programs, you looked at the largest of the federal programs, which is the one that's funded by the U.S. Department of Agriculture, which is our school lunch and nutrition program.
For this year, yeah, it's
Yes.
this is one that's on a 3-year rotation, typically,
Okay.
unless we have percentage differences or whatnot, but that one's at least tested once every 3 years.
And that happens to be our largest program for federal dollars.
Yes.
Actually, your special ed is the
Special ed,
largest.
yeah.
Special ed's a little bit larger?
Yeah.
Yep.
Okay.
So, you know, every 3 years, any program over 750,000 has to be tested. So if we have a problem, if we would have tested the child nutrition cluster and had a problem, we would retest it to make sure the non-compliance was corrected in the current year. But as long as we don't have a non-compliance, we would rotate to other times. And the way the federal and state guidance within the single audit requires is if we have problems, then you're not considered a low-risk auditee, and we have to increase our testing of the size of what we test. So you want to be a low-risk auditee, and you don't want to have findings, and that's what we had.
So a non-compliance would look like, if, let's just say in terms of the nutrition program, if you receive funds for nutrition and you use those funds for something else, that would be a non-compliance.
That is correct, yep.
You can receive the funds and you can hold them in reserve for a planned outlay in the future, and that's not necessarily a non-compliance.
With respect to food service, that's correct. With respect to special ed, it's a cost reimbursement grant. So what you receive has to be based on expenditures.
Okay?
Other questions? So, yeah, very positive statements on the controls here within the district. So, now, we also issued a second document, and I'll turn it over to Amber to talk about that.
The staple document you have is the management communications. Again, just to reiterate, talks about our audit of the financial statements. Our responsibility, again, we're giving reasonable assurance, and we're conducting this on a test basis, which we kind of just talked about. And then on page 2 of this document, this will again go over the financial statements and the federal and state awards, reiterating that we did not find any material weaknesses within the district's controls. On page 3, this talks, at the top of it, it will talk about a couple of the estimates that we have included in the district's financial reports. The first one being your other post-employment benefits, as that is an estimate being prepared by an actuarial study. Your depreciable life, that's your capital assets. Your IBNR, that's your health insurance, that's estimated at the end of the year for any claims that come in later. And then the net pension at liability or asset in regards to the Wisconsin retirement system. That it too is as well done by an actuarial valuation at the state level. We had no disagreements with management. They're very good and easy to work with, so thank you for that. On page 4, again, just talks about our audit findings or issues that we did not have any. And then on page 5, this is where we kind of put together our comments and observations as a part of the audit. And very, I'd say, minor comments, but just some things to kind of strengthen those controls. As Dave mentioned, the state and the feds have been very cognizant and involved in trying to enhance controls at districts across the board. So the first one we talk about is approval and supporting documentation for journal entries. Just trying to put in some extra review and making sure the support's there. We didn't have any issues with anything that we found, but just something to kind of strengthen the district's controls, and kind of gets get busy at times, but if a policy's developed, that might kind of help that procedure in the process. The second comment is in regards to student activity. So as part of our audit, we come out and we do a test basis at the district, or at the schools, middle and high schools.
Just going back to the first point.
Yeah.
Real quick, is that partially due to the small number of people that we have working in the district? That
Yeah.
first comment with respect to the journal entries?
Yes, typically that's the most common reason as to why we'll see this, the approval and supporting documentation, is because you're limited in terms of, you can't take access away from Sherry, you can't take access away from Amy, that you wouldn't be able to do the daily job. So that's where you want to implement some mitigating controls of people outside of that process to be able to review the supporting documentation that's attached and approve those journal entries. But you kind of have to get creative in the structure that you have internally. But that's a big driver that we see at a lot of places.
Okay. Thank you, Amber.
The student activity, again, we go out to the middle and high schools, and on a test basis, we'll test transactions from throughout the year in their student activity accounts. These are the observations that we found. Those have been sent to Sherry and her staff, and for them to follow up, and my understanding is they have started that process this year already, so.
And one of the, I mean, if I could just interject, Amber, I mean, one of the reasons, I mean, obviously they're not your funds, but you have a fiduciary responsibility, so by going out into the schools, I mean, we just like to list all. It doesn't mean that, you know, as we get into it, we have a number of clients, so we do a lot of school districts, you know, it's just about, you know, when you decentralize something, making sure that you continue to enhance.
So the question I have is when you describe, I think on 3 of these, it's long outstanding checks, what does that actually mean?
That's in reference to some outstanding checks that are still on the bank reconciliation. So they might have been written in 2014, and the individual who they were written to still hasn't cashed that check. And so there's certain state laws that processes that have to be followed to kind of take care of those. Some can be written off, some can't be. It just depends on the unclaimed property laws within the state. So that's kind of our reminder to follow up on those and take care of those. Some are very small. I mean, if there's a big check, they're going to cash them typically, or they're going to contact the district to issue another one. But a lot of them are, you know, maybe volunteers or people who got some small payments that are still outstanding.
Trying to check.
Thank you. So the checks are, we wrote them and a vendor hasn't cashed them
Correct.
in all those years?
Yeah.
And then when it says there's only been one deposit during the month of March on our end?
South? Are you looking on South?
Yes, I'm sorry, yes.
Yes. Yeah.
So we only deposited one check.
Not one check.
one deposit.
One deposit.
Oh, sorry.
Multiple checks.
Different issues. There are two different issues that they're bringing to the attention.
Okay, and then if there were 20 accounts with a deficit balance of 5 which exceed 4,000, are we having trouble collecting from people? Or is South having trouble collecting the funds that they're supposed to have?
That could be a number of issues. Sometimes with student activity, you'll see a lot of times, like yearbook, for example, is a common one where they have to cut a check for the books prior to collecting all of the funds. So some of those could potentially be timing issues. Or if somebody has to pay for a field trip up front, they might not have collected all the money at that point in time to pay for it. But it's a pooled cash, so the cash in total covers that. So it's not an overall deficit, but there's definitely some timing issues there. And then sometimes what we'll see is districts don't want to exclude students, so they'll allow the students to go on the field trips or get a yearbook, and they'll pay for that. But then the district needs to subsidize those payments that aren't coming back in. at some point in time.
But wouldn't we see that across the board with all of our high schools if that was the issue? Like, it just seems like that one is having,
That one is the one that stood out to us this year, but that it could be a timing of when we looked at it, though. So we do a test basis. So this was as of April 30th. Come June 30th, they might have been back in the positive.
okay.
So
And then with it, at North, they were being charged by a vendor, they were being charged sales tax, but the vendor was charging them. Sorry, we are tax exempt, but the vendor was charging us sales tax. Are they going to reimburse us or North?
that's something that the district should follow up on, and what we discussed at that point in time. Another thing that we'll see is sometimes teachers or advisors will pay for things, and they will pay tax because they didn't get the tax exempt page. And then at that point in time, the district really shouldn't be reimbursing the tax portion of that to the teacher, to the advisor.
So like, I can see that where if it was just a minimal amount and they're just like, okay, I'm just not gonna worry about it. But if it was over and over again, let's say, getting paper, whatever, then we need to look into that.
Yep.
Okay.
Mr. Clark, when we do these, we're using these pay cards now, right? Trying to use those as much as possible. Is there a protection relative to those cards to whether you're getting your tax exempt?
Yeah, if you want to
That,
answer.
Yes, and our protection is sitting right there, Amy. Amy does a very diligent job every month of the final reconciliation of our P card, and she actually looks at the documentation for the transactions coming through. If anyone has charged tax on there, she bills back the site to reimburse the district for the taxes. So that's at the district level. This is the activity accounts, and this is something we'll be addressing as part of our audit. So the activity accounts are managed at the schools by the athletic secretaries, and, but at the district level, yes, we check the P cards very
So
carefully.
I guess the question I have is why can't the activity accounts flow their purchases through the P cards?
Each athletic director has a P card, and they are welcome to use them for those purchases. 2 out of the 3, I believe, are using them.
That tax exempt number is right on the card, so
Yep.
if they're somewhere where they need to get tax exempt, they can just.
The thing with the student activity accounts, it's not always the AD, it's this club or it's that. I mean, it's a wide array of activities or groups. So yeah, the athletic directors or activity directors have had P cards a couple of years now, roughly.
But you could move those activity accounts, you could move those dollars through your P card program.
Absolutely, they can charge, and then we have a process that reimburses the district, because all P card purchases come through the district's account. We want it that way. We don't want their P card going against their activity account. And then there's a process that reimburses the district out of their activity accounts for the P card purchases.
So it sounds like we should develop a plan for directing purchases through the P card and reimbursement by the activity accounts to the P card program.
We've had those discussions. I don't know if, I was waiting to the end of the student activity section. This has really been a focus of our office for the last 2 years. We've done several things to clean up this exposure, and this is probably our worst exposure next to cash being handled at the concession stand at a game or something where it never hits a bank account or, but so far what we've done is we've eliminated elementary level student activity accounts. We just got rid of that entire exposure to save us, because DPI provides pretty strict guidelines now on the Sunshine Fund and all these funds that aren't student-related activities. So the elementary level has been completely addressed. Amy Holly, who's here for a different report, but she's, not only does she audit the student activity accounts outside of the regular audit process, has been working with the middle schools now to go in and clean up the accounts that are in there and the sub-accounts. The last hurdle in that is moving on to the high schools. They have much more ownership and pride in their student activity accounts, if that's the right word. So we're in the process of cleaning that up as well. And then lastly, I honestly will use this document here with these warnings to go to the high schools and to the middle schools and say, it's not us, it's them. We've got rules to follow. So this is by the next audit process, we should be really in a good place.
Just seems like if you have a tool like the P card, you should use it as much
Yeah.
as you can. It helps with this issue.
One
Mr.
thing-
Como?
Let's-
Go
let's-
ahead.
Go ahead, I'll finish later.
Well, if you're talking on expenses, why don't you keep talking on expenses, because I want to flip over to revenues.
Okay, the one thing with the P cards is that they're not allowed per our district policies to hand the P card to a teacher and let them go use it. So it does limit the amount of people that can use it. So as they're saying, a lot of the reimbursements come through advisors of clubs, and they're out there buying their own things and bringing in the receipts for reimbursement. Our district policy does not allow them to take the P card and go use it themselves. So they can work through the athletic secretary to place orders with the athletic director's P cards over the phone, or work through Amazon. We have Amazon accounts and things like that set up. We have a lot of tools to make it easy, but there's still those people that want to go out and purchase. So that limits a little bit. And then the other thing I just wanted to point out is when Darren speaks to the elementary activity accounts going away, we put all that money into Fund 21. So they still have access to the money that they earned over those years. It's just in a district account, Fund 21, which is a gift and special project account.
Which flows through our office, other
right.
than these
If-
transactions at the schools.
Right. We have the control, it's in our bank accounts, not separate accounts off at the schools.
Mr. Como?
Yeah, I want to switch over to the revenues. What is our procedure? What do we recommend in terms of deposits, and how frequently should we be doing that?
The activity account policy states that they should be doing it at least once a week. It's an issue that we are going to be addressing with this audit, because
That was a surprise, just so one time during the month. That's not frequently, it's not frequent enough.
they are
so.
not supposed to hold on to any deposits for more than, the recommendation is daily with a max of no more than 1 week.
Had an incident many years ago at North with a safe that was stolen. So you want the least amount of money that you can have in the safe, so regular deposits should be.
And also the dollars, because a lot of times a teacher is the club lead, or the money needs to get to the safe.
Right.
That night, but ultimately, we need to get those deposits. We can't audit something that hasn't hit the bank.
Right.
So, we'll be actually refreshing the secondary schools, because it's an issue at the elementary, but obviously there's a lot more cash flow at the secondary level.
So you won't be using Bitcoin anytime soon?
No. No, I don't think that's a sound investment for,
I don't think the auditors would be too keen on that idea.
I don't think state law says you can't use it, but I don't think they would recommend it. So we've spent a lot of energy, and Amy's been great going out to the schools and actually, rather than sending out memos from district office, sitting down with the secretaries and working through the process. And at West High School, we had a person who was out for an extended period of time, and going out and sitting with the person who was subbing for them to try to get them up to speed on what we're looking for.
Excuse me.
Then the final comment, I'll just briefly talk about the transportation. Like I said, from a single audit perspective, we had no issues or internal compliance findings. When we did do the transportation, there was a couple instances where the mileage was off a little bit, but not off by enough to throw it into a different category. So we're just recommending a periodic review of that. But like I said, not a finding from a compliance perspective, but just an opportunity.
Okay, Mr. Clark, how's that happen?
With the transportation aid?
Yeah, how does the mileage get off? I mean, that should be like, I thought we had this great computerized system that tracked every kid.
Like any great system, it's the quality of the data that goes into it. Whether it's a keying error, or the child moves, or, not everyone stays where they are at September 1st and stays there till June 10th or whatever the end of the school year is. So normally it's one of those two variables.
So what what's the criteria that is being checked? The distance the child is bused?
Yeah, they're putting a 0 to 2 miles, there is no aid, 2 to, I forget but there's little segments of travel distance. And you have to put each student that's riding into one of those groups or ranges. And sometimes I'm assuming it's either miskeyed or they move, or sometimes they move 3 times in the year.
Different pickup or drop-off location, that throws things off
Yeah.
too. Maybe they're getting picked up at the corner versus the street.
It didn't misclassify in a different category, everybody, if my understanding is correct. Everybody was in their right category, but it could be an issue. It's something we need to get a handle on so that we don't have the problem where someone was charged wrong on the transportation aid or claimed wrong, excuse me.
I mean, it's one of the areas from an audit perspective in the 70-some schools. I mean, it's, whenever we test transportation, that's one of the more difficult things because of that. I mean, there's no exact science sometimes to perspective. It's one of the reasons DPI has us test and calculate that, so.
I haven't been on school buses for a long, long time, but didn't they have like a scan card or something was there a plan to do something like that with this new provider?
We're using scan cards for Medicaid reimbursement for special ed students, because we have to specifically track those students. But there's no roster on a regular school bus, no.
So we don't know day to day how many kids are on the bus.
Ooh,
We have transportation ridership that we know how many are supposed to be on the
Yeah,
bus. but
assigned to.
Assigned to a given bus, but if a student is absent or that, we'd have to reconcile the.
or decides to ride with their big brother or sister who just got their driver's license that day. No, we don't know those numbers.
They only have to ride one day to get reimbursed.
Yeah, that's the funny thing. They're so fixated on the mileage, they don't care if you ride 180 days or 1 day, though. So it's an interesting, it's something a few years ago started getting more scrutiny than it had in the past, so.
Okay,
I don't know if you're ever gonna nail it perfectly. I don't think it's possible.
And with that, we'll entertain any questions, like I said, and Amber said, from our perspective, we certainly appreciate working with the district and the
okay, we'll open it up for all sorts of questions. Does anyone have any of the all sorts of questions variety? Mr. McCaffrey, I know you've been waiting.
No, I'm just getting back to the transportation. So, like, are you saying that if somebody moves in the district, and do we update that in a different place? That doesn't link up with Infinite Campus, which is changed immediately, I believe. So we don't pull that information on Infinite Campus, import it into whatever software we're using for the buses, and then it's updated?
Sure if it's pulling or pushing into campus.
Or their length, I should
bus,
say.
But they are linked for the busing. But, yeah, so I'm not, but I'm not quite sure. I think it pulls from Infinite Campus more than pushes, because
Yeah, well,
enrollment
yeah,
drives.
right, because
So there may
Infinite-
be a timing issue in when they pull and do updates.
Campus updates every day. Just wondering, I mean, because it should be linked. I mean, the Infinite Campus is the record,
That's where the
the
data,
school record, right, so.
that's where the addresses are, so.
Ms. Ranachek?
I'm not understanding, Pat, your question, actually. Are you saying because if someone moves, then we won't stop at their house and go to pick them up? Is that what?
No, they're concerned whether the child moves and then the distance that we bus him changes. So,
Oh,
If-
so you're saying within the district, because then we would have to
Correct.
go to a different house?
yes, but it's two
Okay.
different systems. Infinite Campus is the, is the record, is the student record, but it's the, software of record. Everything gets changed in Infinite Campus, and then that information to our other stuff. So if it's changed in Infinite Campus, it should be changed in the transportation software
And I would think that would
within
help.
the day.
I would think that would help too if they moved out of the district, then we wouldn't go to that stop anymore if they were the only child at the stop. We could save some money that way. I mean, we're obviously having to pick up someone if they move in the district. We're making an extra stop, but taking away those stops when they move out.
You have to
There are
ride once,
incent-
right?
There's incentives built into the first student contract to always be looking at route reduction, so that they always are looking, can we consolidate, can we change, what can we do? Because they do have incentives built in the contract that are somewhere in between what we would be paying versus what they reduce. So it's, if you wouldn't have that in there, they would have no reason to try to consolidate routes because it could impact their income, but part of the contract that they're constantly doing that.
Mr. Como?
Just a comment. From a school board perspective, this report is probably, if not, it's top two, maybe the most important report that we receive. And we appreciate your efforts in doing the due diligence, and this is another good year for Darren and his team, so hats off to you guys. But you guys help us to determine, to make sure that these guys are doing what they need to be doing from a process and control perspective, and making sure that we're following the laws, the federal and state laws appropriately, and that we have developed systems that guarantee our constituents that what we say we're doing, we are really doing with the money that they give to us. So it's kudos to Darren and his team on this, and thank you for your hard work on the audit.
Okay, Ms. Stack, journal entries. You're the one who's doing most of the journal entries in these things, or who is doing these journal entries? Are they done at the site?
Between Amy and I, we do the journal entries. I'd say at this point, she's doing majority of the journal entries. But the sites can submit journal entries, but they can't approve them. So anything that's coming from a site, we review it to make sure it's an appropriate journal entry. So that, there's definite controls in there. They cannot go in and update a journal entry without the district office. So the main control comes in between Amy and I when we're doing journal entries. Like, I'm the ultimate approver, but if I do a journal entry,
She's approving herself.
I'm approving myself. So that's something that we're looking at, but this is kind of like all rolling into the next segment, so we can.
It's all gonna roll into this
But
next segment, but
I'm just gonna say.
do I know if I can trust Amy?
Yes,
Just Amy.
no,
But even the,
when we reconcile, we reconcile the books, if things were being, done in the journal entries, it would be caught during reconciliation because it would be making our accounts off. But I will say that this year we have looked at some of our journal entries and just decided, is the journal entry the right way to go? So for an example is ACH payments. We have several areas where people pull money from us monthly, mainly to do with insurance benefits. And they send us an invoice and they automatically pull the money from our accounts. We used to do all of those as a journal entry, and we're moving those to AP. So we're printing the invoices, and they're being processed as a wire through AP, so now you have that cross-check because I'm signing off on the invoice with the account, and it's going to someone else to actually cut the check and pay it. So we are looking at where we can improve processes and reduce journal entries.
and one other thing with the journal entries, and Sherry touched on it, but just so you understand the structure, her journal entries, right now, she technically approves them, but Amy does the bank rec. So anything involving cash does have a second set of eyes that are looking at it. It's just that hiccup of really Sherry's journal entries and Sherry approving them, which I think we have a workaround, I think, already in the works. So I'd be very surprised if this is in the document next year.
And we're reducing the number of journal entries.
Yeah.
Amy's picking up more of the journal entries to do them. We're in that 1 year of training last audit where I was still doing a bunch of the journal entries while we transition people on. Now everybody's got their roles and I'm doing less journal entries, so.
So since you said you'd be very surprised if this was in the audit next year, then we
That's a
should be,
challenge.
we should be very critical if it
Said that,
is.
I didn't say it.
Is that kind of, does that kind of go in,
I think this is a very fixable item.
okay, so then we should be very critical if it is, since you'd be very surprised.
Absolutely.
Fixable with the staff we have?
Yeah, because again, we're only talking if it's Sherry's journal entries, you're not talking, if you're asking me whether would like another accountant so we could really spread out the duties? The answer is absolutely yes, but.
I actually I was looking at our auditors for an answer on
Oh.
that, not at you.
Questions
Should be able
about,
to segregate enough from reducing the number to managing how you handle it.
Okay.
so.
questions about adding more staff are not part of this discussion.
We'd be happy to entertain that notion.
And if you remember when we had a lot of staff turnover in one summer. We replaced 4 staff members in about a 6. And we really spent that this fiscal year, we're looking at, once everyone got into their place, looking at processes and how we're going about doing things. And I think we're finally, hopefully we're getting done with that process. So this was, in my mind, almost a survival audit and financials to get everyone used to their roles. And so I think the cleanups will come. And there's nothing concerning to me in here.
Okay, question for the auditors before you guys jump off your, how many audits of similar sized districts do you do? And what, I mean, in this region, between,
Right now,
besides Waukesha, what's similar to us?
You know, we're doing, right now, we're doing about 70 school districts. So we do the Kenosha's, the Green Bays of the world to the Pembines, so the Oshkoshes, the Racine, Shorewood, we do a number of years similar to your size.
So when we look at a situation like right now, they're struggling in one of our neighboring districts, and I probably won't say the name, but we know which district that is. It's struggling with their financial, they're trying to make up ground. They got themselves into a hole. They're trying to dig themselves back out of the hole. What would lead an auditor to identify that before the hole gets so deep? And like in their case, it got to be a pretty deep hole for them to dig out of.
Oftentimes, it's looking at your fund balance, where you are positioned with your contracts and, you know, your debt obligations, and the multitude of things that really impact that. So, you know, kind of as we call it our preliminary analytical review, but we really kind of identify where you are in relationship to similar-sized schools and what are your criteria, because some of the schools that we do get very little revenues because they're, you know, really in a poverty area versus, you know, so, you know, there's a multitude. So we take a look, you know, the state puts out a lot of data reports for school districts that we're able to kind of put you into a framework of how you compare with similar-sized districts with respect to financial information. And we use that data to, you know, come up to say, is there a problem or a concern that we have? But generally, it's driven off of, you know, budget deficits. Are you budgeting deficits and always achieving the deficits? Is it, you know, what's happening from a fiscal perspective? And is it sustainable? You know, declining enrollment, growing enrollment. Those all drive kind of where you are in the spectrum of our analytics.
So we're a declining enrollment district, but we're adjusting our expenses to reflect that declining enrollment from what you can tell so far in the balance sheet or the financial statements.
Certainly a strong balance sheet at this point in time. I mean, you know, the challenge with strong balance sheets is if you don't manage it, your balance sheet could erode, and eroding balance sheet is the hard thing to stop. You know, so districts that aren't right-sizing their operations based on
You've been auditing, your firm's been auditing us for how long now?
4, I think.
So over that 4-year period, we've been trending towards a stronger balance sheet fairly consistently. I mean, we might kind of started to tailor off this last year, but we've grown it fairly well. And we used to have this habit, which is kind of a silly habit, but we do it anyway. Asking for our report card, we have this we have to use the ABCD system because that's what our community prefers. You can't use some hybrid system. We tried that in this school district and it never went over well. So where would you rate us on the traditional? I'm sure it's the system you went through when you were in school, the ABCD system.
I would say probably an A- from a standpoint, from a financial perspective, you're real strong. No deficiencies in either financial reporting and grants compliance, but certainly areas where you can improve on.
So we typically get like a B plus to A minus grade. I mean, nobody wants to give us an A.
A's are tough. You gotta scale them and grade them and
Yeah,
curve 'em.
scale of it, yeah. But I mean, from the trend line relative to other districts that you've seen, we've actually probably gained more on our situation than what you've seen because of the way we've managed things like our healthcare, our payroll. We used to have to borrow the entire year, and now we aren't borrowing at all, and that's quite a difference. And we never had anything applied to our post-employment benefits for a long period of time. So all those things are positive.
Exactly.
Any other comments from you? I guess we go into item number 2 is the management's response. Is that correct? Are we ready for that? Even though we've asked you a lot of questions, you can probably,
We pretty much answered everything I was going to speak to, so it will be very quick, but I would like to just acknowledge that I do appreciate working with Schenck. They're a wonderful firm to work with, and Amber brings an awful lot to the table with this company. And really very happy with our audit. Overall, no findings, which is always what you're striving for. The 3 items that are the comments, I feel we've discussed everything, what we are going to do with them. The journal entries we talked about, what are the things we're going to do to improve those processes. Darren hit on everything I was going to speak to on student activity. So we really have shored up student activity over the past year and continue to do so. And by the end of this year, really we'll have a streamlined version of what you would have seen a year and a half ago in our student activity accounts, with more of the control going to the district of the things that belong at the district. We'll obviously speak to each of these schools directly on their findings and incorporate that. We do an audit, an internal audit of each activity account. Amy goes out and works with them, does the same type of checklists that the auditors do. So we go in advance to look for things.
Just real quick, Sherry, when you said now a good portion of the student activities will be now controlled by the central office, can you give me a sense of the percentage of that? Because, I mean, it's about, I don't know, maybe $300,000, $350,000 that we're looking at in the course of a year roughly for each high school. So what percentage do you think of that is now can be centralized?
I personally feel it's probably close to 30% of what they have out there now. Amy, would you agree with that, or do you think that's a little high? What I've been looking at, what we're evaluating is there's clear-cut rules by DPI on what constitutes an activity, a student activity account. And we're evaluating every single activity account to make sure that they meet those rules. And if they don't, they'll be brought over into a Fund 21 account where they still have access to spend them. It's just controlled by the district and in the district bank accounts. And based on what we've been looking at, I think we're going to find about 30% is going to come back to the district.
Okay.
Fund 21 also allows in Fund 10, if there's money left over, it all rolls into fund balance. Fund 21 can roll forever, so you don't have that accounting issue. Or the fear that central office is gonna
Take their
take
money.
their money.
Take it,
Their money and run.
use it in your office.
Right.
Hiring that new person.
Office supply account, right?
And then with the transportation aid, I do the transportation report, and I will do spot checking this year on it, like the auditors did, to ensure that what I'm seeing has been corrected this year as far as but that's the change we're gonna have this year, is spot checking. to make
you're going to
sure.
ride every school bus at least once?
You bet. Get my badge, get on the bus. Couldn't pay me enough money to get on a school bus, I'm just saying.
We'll have Amy do it then.
A joke.
Maybe I should.
So that is my response.
That's your response. And
Questions?
is Amy here for this response too, or is she here for a different subject?
She's here for the next agenda item.
Next agenda item.
But I'm sure you're welcome to ask her questions if you like, I'm sure. she
We'll
would.
grill her on the next item. The only other thing I would say about this accounts issue is that we should probably have a policy where we encourage our administrators to make sure they segregate funds regardless of what the fund is. So let's say they have a sunshine fund of district staff. They should find a way of making sure that those funds don't get commingled with their personal accounts. Whether they open up a separate little passbook account at their local bank that they can make sure those funds are segregated so they can track receipts and deposits through that fund, regardless of whether it's a school fund or an employee fund or whatever. We don't want our staff to get caught up in something that would be, are you properly using these funds, for any circumstance? I mean, PTOs is the same type of thing, really. It's a parent organization that feels that those are their funds, but it's easy for those funds to get, as we've seen, in that case, it's a lot of money sometimes to be going in the wrong places in the wrong time, or people to commingle those funds with their personal accounts, which is always a danger, right?
Yeah, when you have those conversations with staff, sometimes I'm sure they roll their eyes as another rule but we're really protecting them from a potentially awkward situation, and hopefully they look at it that way. Because there's a lot of good people out there doing good things, and you'd hate to have them get caught up in money in a drawer by accident or, something silly.
Well, I have a personal thing where I just say, look, there has to be a separate account for this. I don't want it in my account, because the perception is that if you put it in your account, then how do people know that you're, the funds that they're giving you is the funds that you got to really track incoming and outgoing. And the only way to do that, I think, is with a special, separate banking account, and encourage our staff never to commingle funds for anything they do. Yeah. Anything over $100 as a total fund value shouldn't be commingled at all.
Thank you.
All right, thank you.
Thank you.
Thank you very much. It was a great report.
Come up.
I guess we can keep these guys for another year, huh?
We'll have to talk about that later. That's a different agenda item, Joe. You're going to try to get me fined
But
for
no additional staff.
going off topic.
That's right, $25.
Yeah.
Now, we talked about, when we brought net requests and a lot of the improvements that we've been doing in the business office, and one of these is this report that's in front of you tonight. We've talked about our Fund 40s. This is where the capital, the maintenance budgets go in for state aid purposes, but also Field of Many Dreams and Land Sales Fund. They're all in here. So a while back, I had promised you a summary report of what's all in there, where are we standing now, and Amy really took the lead in, especially the Field of Many Dreams. Yeah.
We're on information item number 3, just to be clear. Is that
yeah.
correct?
Yep.
Yes, okay. I'm supposed to run the meeting, so I want to make sure where I was at.
Just trying to move it along here.
Mr. Como?
Oh, are you still working on your general? Keep going if it's
So
still.
no,
your general
Amy's here,
information.
and we're going to walk you through our Fund 40s and kind of give you a quick snapshot of what their purposes and the funds are for.
You can go through them and then I'll ask my question.
Okay, Joe. I got it.
So I'll turn it over to Amy, who's been a popular topic tonight, it seems. So
I'm glad I'm here.
So
All right.
Amy, would you please introduce yourself?
I'm Amy Holly. I'm a district accountant here at the business
Okay.
office.
Okay. So they brought you in so that we could ask you lots of questions.
Yes. So I'm going to go over a brief summary of Fund 40s. Fund 40s are all in one actual bank account, the capital improvement account, but they're broken into several sub-accounts. So Fund 41, as Darren mentioned, is the general facility maintenance account. It's mainly for building improvements with tax levy money. So there's not a lot of change that will happen there. It's kind of an in and out, not carrying a fund balance. Next, Fund 44 is our energy exemption fund. That money was actually spent down, I believe, in July of this year, so that will not show in future reports for you. Fund 46 is the Capital Expansion Fund. That is a trust account that was open in May of 2016. It's for long-term projects, so a 10-year plan that Darren brought to the board at one point. You guys approved it. 2015, I apologize. So those funds can be used starting May 2021 for that long-term capital improvement plan. I'm gonna temporarily skip over Fund 47 to 48 and 49. Those are basically a similar account for the property sales. So any properties that have been sold in the last couple of years, the revenue has gone to those accounts. That is not including the proposal of the sale at Highway 164 for this year. So Fund 47, the Field of Many Dreams, that was for the turf added to the 3 high schools. That is the current account that does show a negative balance. It is because we do have some receivables out. We had some 5-year contracts out there for advertising on the fields at all 3 high schools, as well as a 10-year contract that we have with SC Waukesha. So under that information, you can see that I have outstanding 5-year pledges, the SC Waukesha 10-year contract, and then our 5-year advertising commitments.
And Amy, you were correct, it's 2016, I apologize.
Oh.
For Fund 46, I'm behind a year.
So, the comment about combining 48 and 49, I guess we find property sales fund is kind of like a unique account that we like to keep track of. Because it's like a long-term asset to the district that you're turning into a quick asset or whatever that you can tap quickly. And in a way, it seems like whenever we use that fund, you feel like you're giving up something that you probably should be maintaining instead of just handing it over to Field of Many Dreams, for instance, which we've done in the past, or, to the planetarium, which we've done in the past. We're giving away a long-term asset that is important to the district for some community value, and I think it's important that we know that when we do that as a board, that rather than just mixing it with the capital improvement funds, which is kind of what you're suggesting you'd like to do from a bookkeeping point
Yeah,
of view.
just to simplify, because really the sources of the funds are very similar in nature. Not identical probably, but we just thought we could still call it the property fund. We can call them whatever we want, but it would just simplify things. It's not there's not a lot of transactions going in and out of either one of these funds, so it's not a major accounting task or anything like that. We just thought it might simplify, the codes and the number of the funds that you would have to be knowledgeable of.
So how is the capital improvement fund funded?
Those were one-time, some of these go back. The property sales fund, I can tell you, goes back to the late 90s.
Priedemann,
Oh, yeah. Priedemann, I think, was the start of that.
Yeah, but how's the capital improvement fund? That's the one that we're talking about combining into the property sales one, right?
Those are one-time transactions as well.
And mainly property.
Yeah.
This year.
Yes.
But just to clarify, Fund 48 is actually by DPI designation, a TIF account that is only for Kenosha County. That's why we want to move it out, because Fund 48, DPI sometimes changes the designations. When we're reporting to DPI, almost everything rolls up into Fund 49 from a reporting perspective. There's just a few of these that are required to be reported on separately. But for our use, Fund 48 and Fund 49 have been used pretty interchangeably for property is the main source of it. Fund 49 had very little in it until we put a property thing in there for this year. Because and I believe, did we rename it in Skyward even? I think
We did rename
We
it.
renamed it to the property fund in Skyward. So when you see it on a Skyward report, it's going to say Fund 49 on it.
When Priedemann started, or when this fund started, DPI didn't have an assignment for it. So the accounting department must have just grabbed, 48's not being used, which isn't unusual. But then DPI comes along and then makes it something. Then our books look like we have some TIF activity when we don't. So that's the history of it, I guess.
Okay,
Show is Fund 49 property account now when you see it on Skyward reports.
Mr. Como?
Thank you, Kurt. Should our sinking fund for Waukesha South Pool be on here?
Is that in with the field, the Express Swim sinking fund? What fund is that in?
I would have to double check on that one. I'm not sure which fund that goes into right now.
I'm thinking if we're doing the Field of Dreams in this manner, that's kind of a similar similar in nature, that it might be part of Fund 47?
Wasn't Fund 80 at one
It's
time.
one of the Fund 40s, I just
I
don't
can't
remember
remember
off the
which one
top of
it's-
my head either.
Fund 47 was created specifically for the turf fund, so that's why that one is broken out separate. As Sherry said, that, the pool is probably in just a general Fund 40 at this time.
It's 49 if I'm not mistaken, but I would want to double check on that.
Okay. Not that every project needs to have, you know,
No,
its
but-
own accountability. You can have multiple projects being run through one
But ex-
account.
But
so-
Express and Field of Mini Dreams were large enough arrangements where, you know, we can easily track them. And we'll get you an answer to the Express Swim. I know I just asked you, I think, about it the other day, so
Express Swim has a specific project code that we put at the end, so even if it's mixed in, it's easy to pull that out and report on it.
I guess, I really don't understand what's being shown here in this 47. Does this say that we budgeted rental revenue of 4278 for the year? Because, not really, because when you put in 300,000, that's,
Other rental, right?
but SC Waukesha is paying us $50,000 a year for 6 more years. So the budget is $50,000 in receipts. And actually, we just got the check today, didn't we?
We got a second check this year already, today.
So what we did is, the first line is just where we are fund balance wise, and it's a negative position because we fronted the cost on the fields. And then the footnote below with the different numbers tied to it is essentially the receivables that are out there, or the promises of payments that will eventually address the negative fund balance.
so, but help me understand, I mean, is the 300,000 future or received, already received?
Future.
Future, so we received 200,000 from SC Waukesha?
We had up until today.
Yeah,
Now we have 250.
yeah. They give us 50,000 every year.
And,
And of the 5-year commitments, 133,000 of that has yet to be received because we haven't gone the 5 years.
so how much was committed to begin with on that? Because here's my issue, we do these things, and we never get a tracking of whether what was promised to us. I mean, SC Waukesha, great. Kudos to them, they're paying up, okay? But, you know, we've seen it with, you know, in some cases, the Express, in some cases, other things. We don't have a tracking of people honoring their pledges after these things are done. In this case, the pledge is an administration pledge. The administration should be pledging to the district that they're gonna collect advertising revenue. That was part of justifying the expenditure. So administration has to keep that pledge, or and they should be monitoring how well they're doing in keeping that pledge.
We can tell you every person who's made a pledge and every payment they've made. I didn't provide you the breakout by that, because I didn't know if we wanted to get involved with, why didn't Joe's Plumbing pay yet, and those types of conversations.
No, I'm looking at the overall dollars, Darren. I mean, we get a number, but I don't know what was pledged to be at the start of the project.
Sure.
So I want to know what the progress is being made relative to the pledge. SC Waukesha, you know, they're showing it, right? It's there. But I don't know relative to all the other things, are we really getting this? Or is it just something that someone said we'd get and then we didn't get?
I can tell you that, like with any project, the further you get from its completion, the harder it is to collect funds. And we haven't had huge issues, but, you know, SC Waukesha, which, based on the numbers I've seen, was a main driver of this arrangement that we came. But some of the companies that made a 5-year pledge maybe aren't there anymore, or, so when we got here, there was no records of any form or fashion. And it was one of the first things when Amy was hired, is we went through some of it was handshakes, and there wasn't a lot of written, so we're to the point where we can provide you what was pledged and what has been paid by any vendor. But are we running into some hurdles with that? I think it gets harder. I mean, I don't care what the project is.
Well, if we're gonna sit here and crack down on kids for not paying their fees, we should be cracking down on administration for not collecting on these pledges. We need to get these pledges collected. I don't care how far out, there was a commitment made to the board when we approved these projects that this is how we're gonna pay for it.
We can certainly do that. We're to the point now where we know what's out there.
Okay. Ms. Ronachek?
Thank you. So I'm also not reading this chart or graph right. It cost us 512. We've gotten roughly 502 with receipts. Why are we still at a negative 462 balance?
It costs more than 512. The 512 is taking away the receipts you had from the original principal. We've received payments that has reduced it down to 512. We
Okay.
still need to collect $512,000 or thereabouts to pay off the initial investment by the school district.
Okay, so,
And of that 512, the numbers listed below are what's outstanding in terms of the obligations or the promises that were made at the time of the installation of the turf.
I see. So it doesn't, in here, you don't even have the total, what it cost. That would have,
Now, this is a snapshot, kind of like the audit report. This is where these funds sit as of today
okay.
financially in terms of the fund balance and then what we've budgeted for this year.
So we're about halfway there.
I would say that sounds about right, but I'd want to confirm that. And we can bring back a Field of Many Dreams report specifically and map out all of this for you, from
Well-
original cost to what's been collected and what's still owed.
My concern on the Field of Many Dreams is we're gonna have a replacement cost on these fields someday. You gotta have money to replace it, and part of getting money to replace it is getting people to contribute now, so we have the funds in the future for these special fields, which are nice fields to have. I mean, we love them, but, and it's good for the city, it's good for all of us, but nevertheless, we need to collect as much as we can relative to what was promised. Because there will be a replacement cost coming up on these fields.
Oh, absolutely,
Yeah.
absolutely. That's a guarantee.
We could somehow have some type of fundraiser where we actually like section off only half of it, and we're like, okay, this half is paid for. Okay, we need to, that's not ours yet. Like, we need to.
We could paint like the 30-yard line orange, meaning we're,
That's right. That's right.
Run back, go back.
So,
move it every time we collect.
so the visiting team's like, wait a minute, we're playing on half the field? Yeah, we only paid for half.
That might work, though.
Yeah, we still owe half, so we're
Yeah, and we've
short a
talked.
game today.
We've talked previously about Fund 46 being that replacement vehicle where we could start setting money aside on an annual basis to, because it won't be, with 3 fields, it's not going to be a cheap endeavor to, in assuming they need replacement roughly at the same time, and there might be some economy of scale of doing them all at the same time. But now you have the pieces to start that planning. But if you want on the Field of Many Dreams, we can bring back a much more detailed report for you. Again, I just was looking at this as a snapshot in time of where we're at.
I mean, we've always kind of wanted that, not only for Field of Many Dreams, but also for the South Pool, which is an ongoing value-added benefit that was created off of taxpayer dollars, right? And continues to be supported out of taxpayer dollars. So we want to make sure that we see what the value added is coming from the people who benefit from that. Round check? Otherwise, we swim on half the pool.
Those
Only fill it
South,
halfway up.
and those South swimmers and diver are heading to state this weekend.
Yes.
Yeah. And divers.
Diver.
We need more divers.
No, I have one question.
Yeah.
What is the, I'm gonna beat the Field of Many Dreams horse. The 4278 field rental revenue as of 1/31/18, what is that?
That's revenue that's come in from renting of the actual field. So lacrosse, we had a
Oh,
club
okay.
lacrosse rent the fields this year.
So outside of
that's
SC
revenue
Waukesha.
from yes.
Did the junior programs rent their fields? Do you know, how does that work? Black shirts, yeah.
Now typically, they'll play down at,
Oh, they play at Carol's thing?
yeah, sometimes, you know, they've been offered to use our fields, but typically they like to
Okay.
play their game down at
Oh,
the
they do,
the
okay,
new Carroll Field, just because
Okay.
it's, things are close.
yeah, right, okay, excellent. Thank you.
We can do is half the pool as long as we keep the deep end of the pool for the divers open, right? Diver.
So hopefully this answered some questions, and I think we created a couple, so we can bring back, but the main thing is just to get you familiar with what we have, because oftentimes as we're reporting, Fund 40 is just a glob of accounts, and it's hard to even, you know, besides the budget book, but, so hopefully it was somewhat helpful.
So how long you been with us, Amy?
Year and a half.
Is it hard to collect money from, I mean, you're just kind of watching the money come in and putting it in the right places is what your focus is, right?
Yes, for Field of Many Dreams, we started sending letters and invoices to collect on.
Been active in the collection side.
Yes,
bill collection
collections is new to me.
field?
So the late fee penalty should be pretty large by now.
Well, that's one thing with what we inherited, and I don't know the conversations that took place at the time, but what's our vehicle? Are we turning them over to collections? Are we having Amy call that? I mean, we're doing the letters, we've been in contact, we've had several phone calls. One company, I think, struggling financially and might not be able to swing it or whatever, so we're kind of creating the methodology to get better at the collections.
Mr. Ronachek?
Another great idea. How about if we post the pledges on the scoreboard when there's games, so everybody can see?
There's signs. There's a whole story about the signs around the football stadium that delayed it everything a year. But people know those signs are your not your SC Waukesha, but your 5-year commitments. Those are the signs you see around the football fields.
Como?
So the ones who haven't paid, I'm assuming we don't have them up?
We're in that process right now.
Yeah, I mean, that's how you, that's how you get them
No, I
to react.
we
Yep,
get it
take 'em
right now.
down.
Right now, we're in the letter phase,
Take them down.
and next football season's really the chance to take them down.
they're-
They're not up now.
They're benefiting from that advertisement right now.
But those signs you won't see them if you go there now anyways, because they're portable signs, and really what they're shooting for is the football.
Well, you really should put a banner over the top of it, delinquent.
Well, that's
Then
something
pay right away, I think.
Shaming, public shaming, huh?
Public shaming,
There you
yeah.
go.
That approach I'll probably bring to F&F to get a motion on.
Mr.
Actually,
Ronachek?
that's what I meant. I didn't mean those who pledged. I meant those who still have
Oh, I
outstanding
see.
bills on the scoreboard.
Oh.
Yeah, this owes this.
That would look great in board policy that I could operate under.
Well, I'm not saying that in a way, I think we should do something like that. We should advise those who are very nice to us that promising to be nice is not as good as actually being nice. And then we also have to look at, in the event that someone can't do it, I mean, that's understandable, then we have to find replacements for that, It's not just, well, they couldn't pay, but their sign's still up there and we're all happy and all that. No, we need to find someone else who can pay and find a way of making that, either they do it out of the goodness of their heart, that's someone else, or they get some benefit from that. And we need to be proactive in this, because we're not. We need a football field, and everybody, we're gonna raise the money. Then they don't even raise the money, and then they come to us and ask for the money. And we end up giving it to them anyway, which is really not the way to do it when we're gonna have to go to the taxpayers for maintenance on our buildings. I mean, we will have to do that.
And don't leave here tonight thinking we are not active in the collection process, because that is definitely not the case.
Well, whenever we're doing things like this, we need to be very aggressive. If we're going to be aggressive on our kids, threatening not to let them walk through graduation, we need to be aggressive on these other things.
And
Mr. Como.
we're not being mean. I mean, the way it works in the business world is if you're going to advertise, you pay up front, and then your ad is put in online or in the newspaper or wherever. You pay before that actually goes up. So, I mean, this should be, these businesses should understand that and realize that this is just like any other form of advertisement.
Yeah, I don't disagree with you, but I don't know how much we want to get into Field of Million Dreams, but we had some snafus on our end that might have caused some of the issues. The signage was originally supposed to be painted on the fields. The paint didn't adhere to the plastic. When we got here, there was no signs, so I said, well, we can't bill them because there's no signs. Well, then you lose momentum, and I think that's what we're trying to recapture is that momentum in the cycle. Now we've got portable signs rather than, I don't know why we ever wanted to paint them on the field anyways, because I think
The
they're harder
portable
to see.
signs are actually better. You can see them
Absolutely.
from the street.
Absolutely.
They get much better coverage.
So what we did was we came up with a solution with the signs, and then we took those 2 dates and added the years on to when the sign would actually be visible.
Sure.
But the problem
That's
is we
fair.
had a kind of a 2-year, there was no movement.
But we made up for it, right?
In our eyes, absolutely. And made it better. I think they're getting a better value.
I think it was
absolutely.
vastly improved.
So, more to come on Field of Many Dreams.
Any other questions? Well, Amy, thank you for the help. And this is, if you felt that
wait?
you were questioned harshly, we were really trying to question Darren harshly. You just got caught in the crossfire.
I really thought by bringing Amy in here, she'd run cover for me, but,
Cover fire for you, huh?
yeah.
Okay, we'll go on to the district summary for our financial report.
Yeah, just a few slides, and this is the PowerPoint, if you can bring it up, so the public can see it. We had gathered some information for a community focus group meeting that we held, and for the public, the next one's February 19th at Horning. But there were some slides in here, and there's only 7 of them, that I thought were interesting financial facts that this committee should be aware of as you're in the community talking to people who ask you questions about why this and why that I thought were worth sharing. So I just want to run through them quickly. And one of the things that, Amy, if you want to, oftentimes when you look at financial information as a school, you only look at it through the lens of what your school is doing, and you never really look at it through how are we comparing with our neighbors, how are we comparing with state averages, those types of things. So this is just a few slides on cost per pupil and comparing us with Waukesha County school districts, but that's not always a perfect measure because we're a lot different than all the other districts in Waukesha County by size and demographics and those types of things. So I also have comparison data with other large school districts in the state of Wisconsin, just to give you 2 views, but they tell very much the same story. We're going to compare cost per pupil and then the tax mill rate. Then we're going to talk just for a second about how we've done as a district with the tax rate, and then where we stand in terms of outstanding indebtedness. So if you want to go to the next slide. This is Waukesha County. You'll notice Arrowhead isn't in here. Arrowhead is a high school district only, and they have all kinds of different feeders. So I don't know what feeder, elementary district I would use to kind of create a K-12, so they're not on here. I can tell you they spend more per pupil than we do, and I don't think that'd probably be a shock to anybody. So at the high end of cost per pupil, and this all comes from the Taxpayers Alliance School Facts Report. When I do comparison data like this, I like to have a third party. It's their data, their report. They pull it off of DPI, but so New Berlin right now is spending per pupil at $13,857. The statewide average is $12,785. The area average, again for the K-12 districts, is $12,453 per student. And this is all costs in. It's food service, it's debt, it's transportation, and all your operational costs. So I think it's the truest measure of efficiency. Waukesha, we spend $11,579. but we're very tightly grouped with McGuanago and Hamilton on a cost per pupil basis. Actually, we spend $1,200 less per pupil than the state average. If you were to multiply that by 13,000 kids roughly, we would have to spend, $15, $16 million more per year. I'm not here to say we should, I'm just giving you scale. So that's the area school districts. Amy, if you want to.
Mr. Clark,
Yeah.
I think one of the things that'd be worthwhile on these charts is show the amount that comes from the ratio that comes from the property taxpayer.
Oh, the state aid versus local?
Well, just whatever, I don't need the state aid because you got federal dollars, you got other things in there. Just the amount of dollars that we'd allocate that comes from our local property taxpayer. That shouldn't be hard to do because we kind of know what that is, more or less, right?
Yeah, you can do it on a percentage basis, sure. Absolutely.
Relative to all the other districts, I'm sure they know what, we know what they're getting as a percentage of local taxpayers. And for instance, if you look at anyone who's spending more per pupil is getting more from their local taxpayers because they're of the formula, right?
Absolutely.
So we'd like to show that, not only are we spending less, but it's also helping us keep the overall
Locally.
local tax burden down because the state's willing to pick up more because we're
A little shown in this next slide.
Okay, if it's gonna show it, then I'll keep my question.
So here it is, their tax rates. And if you remember New Berlin and Menominee Falls, getting really to Kurt's point he was just making, they were the highest spenders. They have the highest tax rates. So it's not unusual to see those move together.
But that tax rate's not the story I want to see.
Right.
I want to see the actual dollars.
Yep.
Yeah.
State average and area average, right around 995, 996 range. And we're at 866. Now, this was the 16-17 budget year. This year's tax rate was 821, so it's significantly lower. And again, the downside of using a third-party source of the information is there's always a year lag, but I think it's good to use Taxpayers Alliance as a source. So we have the lowest tax rate in Waukesha County, and much below the state and area tax rate average. The next slide. This is the same information, but just a different comparison group. These are the large school districts. Some people in Waukesha County could say, well, you have more people, you only have one superintendent, da-da-da-da. This is really, if size is what you're looking at, is more of an apples to apples. But yet, if you look at the results, cost per pupil, we're at the bottom for the large school districts in the state. Madison's leading with 14,203. We're at 11,579. If you want to go to the next slide, you'll see the tax rate follows. I don't know if it's district to district in the exact same order, but it's the same trend where if you're a high spender, you generally have a higher tax rate. But again, we're well below the large district average and again, below the state average. Just quick snapshots of information that I think is helpful in framing how we're doing financially, whether it's a cost per pupil look at things or taxation. The next slide, Amy. Here's the large district average, the state average, and then the county average. I'm still working on this graph. I don't know if it's quite where I want it to be, but the orange is how much more they tax than we do. So the large district average is $1.42 in tax rate, higher than the $8.66 that we levy. Again, just trying to give people who generally don't have much, 99.9% of the population don't know anything about school finance, but hopefully this will give them.
Maybe you draw a line at the 866.
Yeah, that's what,
This in yellow.
or shade it, yeah. That's what I was thinking too. It's a good slide. I think it's good comparison data. It's one of those things you keep looking at, like, how can we make it a little better? So, next slide, Amy. Here's our, this is specific to us. This is our tax rate history. tax rate went way down in the mid-2000s, and then it jumped up. Well, there's a recession that hit then. Valuations were really moving up quickly, and that's, your rate fell because of that. And then the inverse happens where valuations declined or were stagnant. But now we're trending back down. We're at 821 this year. Our average over that time is 896. I don't know if it tells much of a story, but it's our history. So, any questions on that graph? Or
I think the problem with focusing too much on the mill levy is everybody knows that that's doesn't tell much of the picture because it's based on property values. So the spending per pupil is probably a better indicator of how much the taxpayers are benefiting from their efficiency.
yeah, that's why I give both. I mean, some people look at school efficiency as strictly the piece of mail they get in December.
Right.
Some people look at more in-depth data like a cost per pupil.
Because did we have the mill levy in there for the different school districts around us, or just ours? Their school mill levies?
Their actual levies,
Yeah, their dollars,
we'd have to dig that out. We have it. It's certainly out there. I don't have it as part of this, no, because I use tax rate because when you compare their actual levies, the size of the districts are so big. We'd look like a redwood next to a.
I guess
a
that's the
nutri-
problem with using mill levy, because you can't really,
They're apples, but they're not, kind of.
yeah,
You know what I mean?
they're funny looking apples.
Yes.
Darren, if I could just add quickly, you were asking about the property tax dollar per pupil as a comparison. Menominee Falls, for example, and this is the same information as where Darren got his other stuff. Menominee Falls, for example, their per student property tax is $10,624. New Berlin is $11,444 compared to Waukesha, which is $6,182.
Yeah,
So I mean, we can do all these, but I'm saying that's just an example of where the rate compared to the spending is.
Right, we're dramatically different in
Right.
terms of, and part of that's because we've given up on some programs, actually, but nevertheless, when your rate per student goes down, there's some programs you didn't have that you used to maybe have at one time, but it really helps the top property taxpayer, but, we're trying to be as efficient as possible.
Well, and the state dictates that number through the revenue control.
Right.
So, I mean, you
we-
can change it through referendum, but that's a
Yeah,
tough one.
we could change it through referendum
Right.
and add more programs if that's what people wanted. And we did that one time. I
Right.
mean, we added, when we did have one successful referendum, we did add some programs, but then we had to cut it back as time went on. But I just think it's a good way of illustrating that we're right. It doesn't matter what we do in the future, but I'd like to have the right snapshot of where we're at today. What we do in the future is a different conversation. I'd like to have the right snapshot of where we are today relative.
And one other thing with the cost per pupil and the tax rate, when you're talking to a community group, you've got to keep the measures simple. People understand cost, total cost divided by the number of kids. They kind of grasp that, and tax rate is a very comparable number. But your taxation per student, I think, is one that we can put together, I think.
The mill rate's a personal number. Everyone,
Yeah, yeah.
Well, what's frustrating for me, I mean, I had a conversation just over the weekend, and the gentleman lives in the Elmbrook School District, and his taxes are more than double mine, okay, as far as his total tax bill.
Yeah.
And I'm sure he doesn't have more than double the house, okay? And when I said, well, how much is your school district taxing you? He had no idea. Didn't even,
Not unusual.
the idea is that we all care about taxes, but we don't look specifically what's causing that tax burden. And, everybody should, and then they'd get a better feel for what you're putting your dollars towards and how much.
We just had one person, I don't know if it was the board meeting or the focus group say thank you to the school district, because I noticed that line item went down, and
Yep.
99.9% of the people out there don't know the pieces, you know, and how they work together. So there is one person out there that,
Unless it goes up dramatically, then they.
Unless it goes up
Then they figure it out
dramatically.
pretty quick.
Yeah.
And then we get
But-
those emails.
there is one person who did the math, or and did look at the detail.
And I think that was the person who doesn't want it to go up either.
Probably.
Yeah, I mean, he was like,
Probably.
I'm happy with what you've accomplished, keep doing that.
The next graph we have is indebtedness. Two snapshots, June 30 of 16, and then the green is June 30 of 2017. So we've actually have less than what's shown there, but, you know, again, it's slightly dated information. So this is what's out there now. We're at the very bottom. Hamilton's slightly below us. Actually, I think if that snapshot was retaken, if you remember, we paid down our Fund 38 debt last year and we got the settlement. Before that payment is still reflected in these totals. Otherwise, we're neck and neck, and obviously we're significantly larger than Hamilton is in terms of valuation or pupil count, however you want to measure it. So I think this is a good slide for the community to see that we're doing a very good job with debt, and that the district, we're scheduled to be debt-free in 2021. That's Fund 38 debt. So
We did have quite a drop, though, from 16 to 17, so that must have reflected some of the OPEB settlement.
yeah, when did we make that payment? I remember. Oh, maybe that doesn't reflect it. So now we have three $1 million, each year we're paying 1 year in principal and interest until 2021, and then and that's all tied to Fund 38 debt. Hamilton's might have more debt soon, might not. I don't know the outcome of that upcoming, but overall, it tells our story very clearly. I actually really like this graph. I can tell you that Muskego just issued debt, Guanago just issued, obviously, and then Economowoc, so.
I think another interesting number that'd be worth having is our fund balance as a percentage of our annual budget.
That'd be an easy one to capture.
Everybody has a fund balance that's in their audit reports, right?
Yeah, that one you could capture pretty easily.
And we can actually show a fund balance of our annual budget and what we've done in 10 years, you know, because we had a negative fund balance if you count the liability that we refused to pay, right?
Yeah.
Significant one.
I know in the 90s it was 300,000 at one point, I remember, so.
Zero at one point.
Well, yeah.
Well, it was minus 70 million at one point.
So we got, again, this is just quick snapshots. It works well in the community groups because it's things they can grasp quickly. And then I think that's, and then this is just a summary. Over the last 6 years, our mill rate has fallen from 958 to 821, a drop of 14%. We continue to operate well below per pupil, cost per pupil and mill rate levels. And then, again, to provide scale as to what, $1,200 doesn't sound like a lot, but you multiply it by the number of students in our district, and that is a sum of money. Again, we're not proposing that we increase, and we don't have the authority to increase spending at that level. So that's the last slide, if I remember right. Oh, guess not. Way longer than I thought.
Two more.
Again, here's our debt situation. At the end of this fiscal year, we'll have only $3.2 million in outstanding debt, and we'll be debt-free in 2021. Our last bond rating, you only go for bond ratings when you're borrowing, and we haven't borrowed in several years. So the last one we have is November of 2014, and at that point, we had a AA stable. Bond ratings, stable means really good. The words don't really draw the picture. So if you go to the next slide, here's the districts out there who have ratings. Not every district has a bond rating. They might be debt-free or, so old that they're not registering it. So you have Moody's and Standards & Poor's are the two companies out there. They have different letters, but if you go straight across, it's the same tier. We're AA under Standards & Poor's. So there's only 15 or so school districts that have a higher bond rating than we do. And some of those, it's not unusual for districts really going for the high rating to go to both agencies. So some of those, was it 18 of them? It might be the same district in there twice, because they're shopping hard to get the best rating possible. But we're certainly in the top tier of school districts in the state of Wisconsin in terms of bond rating. And bond rating is an outside group coming in. It's not us saying how great we are.
Well, is the bond rating public information?
Absolutely.
Yes.
So you should be able to find out who the 4 AA plus.
Oh, yeah, we,
We could.
yeah.
You know,
I don't know all of them, but I mean, we can
only
find out.
4.
I know, but they're not in this particular book. We'd have to.
Well, it'd be interesting to know what a AA plus district looks like.
I know one is DeForest, because they have a massive fund balance. That's the only one I know right now.
It's driven by your fund balance. I mean, that's the driving.
Yeah, yeah. And we're with our fund balance growing over the last couple of years, we're in a spot, I think, where we can get a upgrade. And when that rating was done, we still had a little bit of the OPEB issue over us, and since then, that's been completely cleared up, so.
So, just before you ask this question, Joe, so if we were to go out and look at taking on debt, would we pursue another rating from the other agency? Would that be the plan?
Well, I mean, what they do, and I'm assuming they still do this, though they'd go to both ones and figure out where are we gonna get the best one. And I think Standard & Poor's probably has been more consistent for us, so.
Does it
That's-
happen prior to us going out for the bonding?
Well, in the meantime, what we'll do is they'll say, here's what you need in place in terms of policies, fund balance makeup and all that other stuff, and then we, put those in place. It's not a guarantee, but there's things that we should be doing relatively soon in the future in terms of financial policies, which we may already have. They may be already be
Yeah,
okay.
I actually met with
Yeah,
Michelle
yeah,
Weiberg this
yeah.
morning to start talking about policies and the things you can affect. Sometimes your fund balance is what it is and you can't.
And I would think we'd want to get that rating sooner rather than later, because that will dictate what our ultimate payback expenses. It will dictate maybe then how many years we bond for and a lot of those things, so.
Mr. Como?
So we heard tonight from our auditors that we have a healthy fund balance, which is good. We're in good health. And this is where we save money. By being in good health, first of all, we don't have to do a short-term borrow, so we pay no interest on that. We basically can fund ourselves throughout the year without going out and borrowing money for this year's, to pay this year's expenses. And here's the second way, is when you go out for bonding, a long-term borrow, better rating, the less you pay in interest. So being fiscally healthy is a good thing and actually saves you money in the long run.
Well, one of the factors that plays into that is traditionally, we've had a healthy tax base. So when they bond you, they look at the overall net average income of your community, economically, how strong is your community? That plays into that rating as well.
Part of it, yeah.
Yeah.
But if, let's say, our fund balance was 0, our ratings here would be a lot lower. Our interest rate would be a lot higher when we go to bond. And we'd have to be doing a short-term borrow, which we'd pay interest on, so.
Okay.
And that's it. I thought there was some helpful tidbits of information.
Okay. Monthly budget update.
Great. I will start with the tax collections. We received our first tax collections of the year in January, and they came in right at the same percentage, a little bit higher than last year. This year, we've collected 55.6% of our taxes versus 54.8% in January.
1 second. Amy, thank you for coming tonight. Yeah. Yeah, sorry.
So tax collections are right where we want them to be. When I look at this report every month, what I do is kind of go through and look for any anomalies in our reporting, and everything's looking as usual, good. There's a few areas that I wanted to point some things out. Student fees, if you're looking at the actual budget report, the student fees are $292, and when you look at the percentage, it says that we've collected less than we did last year. But last year, we had such a big push to get back on delinquent delinquent fees, and really did a great job of collecting them. So it does look like it's lower, but it's because there's less fees out there to collect this year. So not a problem. That's from the revenue perspective. On our state sources, those are coming in as the appropriate timing. We just received our transportation aid in January. Bilingual, bicultural, we received last year a little bit earlier, but that aid generally comes in anytime between January and April. So it's coming, it's just not here yet. No other real surprises for revenue. We've got our federal and grants. We had a lot of claims that went in January that we're seeing the payments in February. Part of that is with the new WISE grant system of claiming. If there's a budget change happening, we can't submit a claim. In the past, it didn't matter, so we're still working through timing issues and communication with our partners in T&L who handle those grants so that we can get them claimed on a timely basis. Nothing surprising on other revenues. For the expenditure side, our salaries and benefits are right in line with where they should be and in line with where we were last year. Under purchase services, there's some that look a little off, and so I just wanted to point those out. Property services, looks like we haven't spent a lot of money this year, but that's one that typically we get more expenditures toward the end of the year for some of the projects coming up in the summer that get paid. So I fully expect that to reach the funding that it should be. Operational services, this is one that I need to look into because we are substantially over budget. That is because of the Waukesha West tennis courts, so I need to look and figure out, did we have that budgeted somewhere else? Or was it a fiscal year issue that really it should have come out of last year? But that's what's causing that blip on that particular.
What was the Waukesha West tennis court?
Tennis courts were
Resurfacing.
redone, but
Resurfaced.
we missed it. It was supposed to be done the summer before. Some issue with the contractor where they couldn't make it. I know that because I had received calls on it.
So it ended up kind of crossing the fiscal years of,
Exactly what it did.
and the payment ended up coming in to this fiscal.
So you received calls on it regarding,
We were told everybody that the courts were gonna be done one summer, and they weren't.
So at the end of the year, wouldn't we accrue for something like that?
That's why we have to go back and make sure that we've reversed it, so the accrual transaction will.
Okay.
One that I'm under investigation.
Ms.
with.
Ronacek?
So-
Thank you. Sorry, I don't know if I'm jumping ahead, those capital projects, it says you've spent 36.99, is that supposed to be percent?
On my report. Yes, I
Yeah.
apologize. That should be percent, sorry about that. Okay, so in purchase services, the other item that looks way off is information technology. I just met with Steve on their budget. They're overall in really good shape with their budget, but some of the different categories are spending higher and lower than other categories, but bottom line, they're in fine shape for technology, so that's not an area of concern. Payments to CISA, that's what I'm looking into.
explain that a little bit more? I mean,
That's just one area of information technology, the 360. is, oh goodness, it is, I believe it's the software category, I'll have to double check. But some things get paid sometimes under 360 versus 320, and they get put in different categories than where they're budgeted. And so Steve is looking at, do we have everything in the right place? And are we going to do journal entries to move them around to where they should be? But the overall technology budget is sound.
Do we have the technology committee watching that closely?
Yes. We have an upcoming meeting.
Because it's a big difference. It's, but I assume there's a reason for it, but
Well, yeah, software services go under different
Different buckets.
buckets, and if you put it in the right bucket, it'll throw it off, but it balances, I have been told.
Yeah, the bottom line is solid. Steve has got plenty of money in this year's budget left to spend on what he needs to spend it on. So, just met with him last week, looking at, because
the report doesn't look right.
the report just doesn't look right.
We're not overspending,
You're not, correct.
that I can guarantee.
When,
Mr. Como?
But we could be spending more in some categories, less in others, or it just could be a mistake. You're gonna try and figure out whether it's a mistake in the categorization, which account it was applied to, right? Versus,
correct.
This is not money coming out of the Field of Dreams Fund to pay for IT, is it?
It is not.
We might have to put some in there from the IT fund.
When we do the budget, we put things in different categories at the beginning of the year. We, in the past, had them make budget adjustments all year long if they moved one thing from one category or spent in a different category than they had originally anticipated because plans changed. In the past couple of years, we've asked them to manage to their bottom line budget and not have to do the micromanaging of all the journal entries. So that's what ends up is that some categories look a little bit over, but I just pointed that out to assure you that we have reviewed it to make sure that the IT budget is not going over in any way, shape, or form.
Keep in mind, this is a snapshot. A correction to a transaction could have been made on February 1st, and this report's through January 30th. And
right,
that's why we come in monthly, so those things should run themselves out, and, over time, you get a clear picture of what's going on.
So just on the IT budget, I mean, we had a little conversation about this before, about the cost of the cloud. And more stuff that we're doing is trying to push us into the cloud as part of the resource that we're using. When that happens, you're going to face, it's almost like being held hostage. I mean, because now you're in the cloud and it's hard to get out of the cloud and they can charge you whatever fee they want. So there's something that we need to be cognizant of as we're being pushed in that direction.
Yeah, it's pretty common to change stuff. I mean,
The problem is,
cloud is kind of a misnomer.
well, the problem is we have
Still sitting on
applications.
a server somewhere, it's not floating around.
Problem is we have applications that are pushing us into the cloud to use the applications, which could drive up our cost,
Right.
right?
There's different services, though, within the cloud. Go with, different places.
So it's almost like,
Oh, cost, I mean,
yeah,
right.
it's almost like, it's like a make or buy decision. We should
Right.
have a cloud or no cloud decision being something that
true.
is part of the IT responsibilities.
Right.
Because it's so easy to say, oh yeah, the cloud would be better, but maybe it's not.
No, it might not be, or it might be good for some things and not others. So then you have like a hybrid where you're hosting stuff yourself and the cloud is being hosted in the cloud at a decreased cost what we could host it for.
Because I'm seeing entities like Skyward and Infinite Campus, they're going to cloud-based applications, and I can tell you they're not using the lowest cost cloud-based providers. They're using some pretty high-cost
We're
ones.
hosting the Infinite Campus ourselves though right now. It was better for us to have
Right.
it here than,
I would think with our budget, it would always be better for us to have everything here if we can versus in the cloud, depending upon the scale and the
right,
application.
yeah, the scale is always what's gonna, what we can handle here with backup as well is also an issue. Because that data has to be backed up with a disaster work out when you're hosting it yourself. You gotta factor all that in. I know that we had talked about deferring some of the costs and, sharing some of those costs with the county and the city as well.
Yep.
Great, moving on. Non-capital objects, nothing outlying there is a concern. We've spent 54.24% of our budget so far this year, which is in line with last year. Capital objects too, nothing is out of the ordinary of what we had expected to spend, so that's right on target with our percentage spent. The one area I'm gonna move to is insurance, and do have a concern with workers' comp, and I'm looking into that to project out where we're gonna be at the end of the year. We had a change in insurance companies, and I don't know if we had a change in mod this year. We do have a change in mod for next year, but we're already at 84% of our budget. Some of that could be timing of payments with a new vendor, but I'm looking into that with our insurance person in our office to try to determine what we have left to spend in that, what are our upcoming bills going to be, just to make sure it doesn't go over. Just a little surprised that we're at that high level already.
Yeah, we've actually been getting dividends back or whatever, stipend back, because we haven't made that many claims. And so when we change vendors, we break that history, right? But I'm still assuming that the current vendor would potentially work in the same manner or not?
Correct, yes. There's a dividend in the contract, in the clause, dividend.
Okay.
And we would still get from the prior vendor, we still get any dividend that we were due from the prior vendor, even though we switched.
Okay.
It's just, is the timing of those payments the same, and those are the types of things we need to hammer out.
How do we budget for insurance and budget judgments?
Sorry, what?
How do we budget for insurance and judgments? Are we making a provision for a potential judgment, or is it always just insurance in there? Because it's $937,000. Much lower this year than we were last year at this time in insurance and judgments.
The majority of the budget is for premium payments, not judgments. It's mainly the premium payments, which we know when we have the contracts with the vendors.
Judgments is a DPI definition of that account range.
Oh, I was gonna say,
We don't budget for judgments.
There, I think we put 25,000 in every year for miscellaneous, somebody falls in.
Yeah, I
like
usually,
or something.
I usually budget half the deductible, because there's gonna be some things that come up. Sometimes you spend it, sometimes hopefully you don't, but
Well, this is an example of timing of payments, probably.
I'm hoping,
I think so.
Well,
what I believe, but it is.
otherwise, it's positive for us on this one.
The bottom line, yes, workers' comp, no.
No. So, okay.
And that's pretty much it on Fund 10. Fund 27 is right where we expect to be with all the expenditures. Other than the salary and benefits, most of the expenditures are all grant-related, so we will be getting in, we've been spending it, and we have claims in to be pulling the money in. So there's really, in January, we received our special education aid. It was not recorded yet when we ran the report, so there is an additional $900,000 that isn't recorded as revenue in this report, just because the entry didn't make it in before I ran the reports.
Como?
Yeah, we're running a little higher on the, as you pointed out, the private schools and the pupil transportation under purchase services. Is that just a timing, or have we actually, or do you think we're?
Are we on special education or
Yes,
regular?
Fund
Okay.
27, yeah.
Yes. So.
So your second item on your summary, purchase services, you mentioned that we're at 41.74% as compared to 90.95% as of last year. So I just didn't know if we were,
Timing of, yes, thank you, that's the timing of the payments for tuition, mainly tuition.
but we're still within budget of
We don't
for that
expect to be
particular-
going over on that.
Gotcha,
Yeah.
okay.
Back to, we're talking about special education. There's an article in the paper today about the impact on district budgets relative to the new special education.
I was just reading about that today, too. There's been a change to the voucher program.
Right.
So the special education voucher program is for special education students to go to private schools and have it funded, and that money directly comes, the current state, that money comes out of our state aid, but we do get a revenue exemption for it that kind of washes it. And our current funding is at $12,207 per pupil. This new state law they put in will allow private schools to claim up to 90% of the actual cost per student. Now, there's an $18,000 cap on what comes out of our state aid. Looking at, we have 7 students in the program, although it grows up every year, but given if we continue with 7 students and every one of them claims their max, and it's over 18,000, the impact to the district will be an additional $40,000. It's unclear if they are going to allow us to have that amount on the revenue exemption. We have a federal funding conference coming up in a week that Amy's going to, and I've provided her with a list of questions to pick at them for this, because there are a lot of unknowns about it. And then after that 18,000 up to the 90% of the private school claims, it says it will come out of a general state pool of money. And I don't know if that means that in the budget, there's been put a separate pot of money aside for this, or are they saying it's gonna come off of our general aid to all the schools and reduce the aid? I'm unclear on that, because I just saw this about a half an hour before coming to this meeting. So I had very little time to,
About accountability.
Well,
is that what you were talking about?
yes,
or-
that's what I'm talking about, but the other comment was made is that you're still governed by revenue limits.
Exactly.
And even though they say you could so-called collect that from your taxpayers, which I don't think is really right, okay? We're only allocated X amount of dollars as state aid relative to special education students. And that may be 100% of that state aid goes with the student. But now what they're saying is they can claim more than that, and the rest of that's supposed to come from our taxpayers?
That's the part that, correct. I'm hoping that they allow the revenue limit exemption to be raised according to how much we end up paying, but that would be almost a year in arrears, because we don't necessarily know going into the year, right, what that private school claim is going to end up being at the end of the year. So right now, we get a one-on-one exemption. We pay X amount, $12,207 for all 7 of these students. We have to pay the private schools, it comes out of our aid. But we also get a revenue exemption that allows us to reclaim that in tax money. But I'm not sure, they haven't spoken about the rules yet on that difference between the 12,000 and 18,000, what impact that's gonna have to our exemption. And it also doesn't mean that every school is going to go above the 12,000. They're gonna have to, I'm assuming they're going to have to provide proof of excess costs to that student.
No, they don't.
They're gonna
There's-
just
there's
claim
no
their
accountability.
18,000.
Yeah, they'll be able to go the whole thing, yeah.
So
Unfortunately.
what we need to do is find out, is it gonna come from our taxpayers or is it gonna come from our kids? Because it's gonna come from someplace.
Correct.
It's not gonna come from the state. You're either gonna take it from our taxpayers or from our kids.
Some pool of money.
There's no magic, the rainbows here don't have a pot of gold at the end of them. I've checked, I've never found one yet.
Right.
So,
And these are all questions that I've asked Amy to look into at the conference. I think it's next week or the following week. It's the whole special education funding.
and I don't know a
conference,
Waukesha voter that would feel good about this money coming from their tax dollars or taking it away from the kids. I mean,
basically. Totally agree.
it either gets paid for by the state or they should be claiming what we would normally get, which is, we normally have to make this up within our own budget. Private schools should have to do the same or get the money from the state.
Well, and another frustrating aspect is we also can claim excess costs for high-cost students that cost the district. We don't get near 90% return on our claims. There's one pot of money, and it depends on how many people put in claims for that year. on high cost for their special education students. And then that bucket is divided accordingly to, so there's never a guarantee of what percentage you're gonna get back, never hits 90%. So it's frustrating to see that they get the
Often not
automatic.
worth the paperwork.
Right.
So this is an example of when you have private schools able to hire lobbyists and public schools who can't, really. So they're able to hire lobbyists to get this money jacked up. And unfortunately, it's at the expense of our taxpayers or our kids, the way it's looking right now, per that article.
Right, right. Yeah, I mean, that particular group has the funds to contribute to, various legislators, which we can't do legally, and so there is a built-in advantage. All we can do is, as a group, advocate for, protecting our property tax and our school district revenues, which many of us do, superintendents, business managers. But again, we don't have the ability to
Tribute to
fund
someone's,
political contributions, so.
or should we? Yeah. Anyway, we should always use our platform to highlight these things so that people know how these things get paid for. Mr. McCaffrey?
On the radar of the school organization, that we remember? No. Yeah.
Southeastern Wisconsin.
Oh, it's the Southeastern Wisconsin School Districts Association. Are they
Sousa.
looking?
I received it on the what is that legislative group that we get
Legislative
the?
alert kind of thing.
Yeah.
It's a
we get that
legislative
still.
alert, so there are watchdogs out there watching it. Because that's where I saw the initial article, and then I did digging on it.
I'm sure it'll be a topic of conversation.
It was something that kind of slid in to the budget without any public discussion.
Watching it and addressing it are two different things, though. Bless you.
Well, I think it's an issue that obviously someone will correct at some point in time, so the sooner the better.
Any other questions? Otherwise, that concludes my report.
Any other questions from board members? And thank you very much for that nice report, Sherry.
Welcome.
No,
We had a little time this time.
and nobody's pushing me to end the meeting early, but I guess, is there, I think that's the end of our agenda, is it not?
Executive
closed
session, that
session.
shouldn't take
More than 2 hours.
We're limited to 2 hours today?
Okay, that's, I guess there's someone who wants an executive session tonight. Can I have a motion to adjourn? Mr. Como?
Move to adjourn to executive session pursuant to Wisconsin statute 19.85, parent 1, parent E, for the purpose of deliberating and negotiating the purchase of real estate.
Do I have a second?
Second.
Okay, motion by Mr. Como, second by Mr. McCaffrey. Additional discussion on the motion? Roll call vote?
Ms. Reincheck?
Aye.
Ms. Madden?
Hi.
Mr. O'Brien?
Aye.
Mr. Como?
Aye.
Mr. McCaffrey?
Aye.
Motion passes 5-0.